All right, everybody, welcome back to the Horse Track. New time, same show. I am your host, Horse Lover Fat, coming to you live from the Place Your Trades Network. Today, we're going to be talking about CME's new event contracts and my picks for tomorrow as we watch this wild market action right now coming into the day's close. Today's podcast is brought to you by Trade which has built a custom app dedicated to trading event contracts. This is what we're all using at placeyourtrades.com. Use the link in the chat to start using the Trade web app for free, where you can follow along and make your own picks. Once you sign up, your first pick will be free. And make sure you like and subscribe to our channel and set notifications so you never miss our podcast. Thank you for doing that. Make sure to sign up through placeyourtrades.com. We're going to bring in my guest here, as usual, my partner in crime, Markets for Mayhem, Mr. Mayhem. Let's bring him in, Sharp. Welcome to the show, my friend. How are you?
Doing pretty good, sir. How are you?
Pretty good. Getting a little bit of gnarly mic feedback, but well, that's all right. Let's chat here about markets. Before we get into our picks for the day, I want to do headlines. So let's talk about the news. What have we been seeing? So I think the biggest news yesterday that I want to chat about, JP Morgan CEO Jamie Dimon kind of shocked the world with his statements yesterday saying the U.S. is likely to dip into a recession in the next 6 to 9 months. Jamie received a response back stating, "Yeah, we know," signed literally everyone, proving once again that even the apes YOLOing out of the money calls on Robinhood know more about the state of the economy than those in power. Would you agree, Mayhem? Were his comments shocking yesterday or something that, everyone's been talking about?
Yeah, I don't think there's anything new under the sun with it, but I do think that Jamie Dimon has been pretty consistent in looking for a bleaker economy and a more aggressive Fed than was consensus. So at the very least, he has that going for him.
That's right. In other news, according to Twitter, did you know this? Today is Portfolio Day. This is where creative people looking for work share their portfolios online. But you don't have to be an artist to join the fun. You can just attach a photo of your portfolio lost porn to your McDonald's application if you want to join in Twitter's Portfolio Day with hashtag Portfolio Day. In sports news, the Detroit Lions suck. Hold on. I forgot to write a punchline for that joke. Moving on, in celebrity news, here's a couple interesting ones for you, Mayhem. Supermodel Bella Hadid brought back the visible thong trend for her birthday yesterday. I have no idea how this is breaking news. In my house, that's just called Tuesday. Do you know what day it is today, Mayhem?
Apparently, it's Tuesday.
It's Thong Tuesday, buddy. Let's get this party started. Did you see the headlines today? The band Blink-182 is officially reuniting for their first tour in 10 years, topping the headline news today under the category Things Absolutely Nobody Gives a Shit About. When asked why, the members of the band stated it was either this or write an open letter to the Fed. No, nobody's getting that joke. Everybody's watching the market get wild right now. I couldn't resist a Kathy Wood joke here, but that's your headline news for the day. And I think we want to talk about what everyone's thinking about, which is this wild market that we're seeing right now. And what are our picks for the event contracts? What are we going to do? So let's make some picks. Shark, can you show us the stats? All right, here on the screen, we have the horse track stats, and I have the last bubble under each of them as white because that will be today's close. So we don't really know what today's close is going to be. However, it's not looking so good. Things were off to a great start today for the bulls, but, a little bit of BOE news came out and absolutely tanked on this market. Mayhem, you want to give your thoughts sell-off in the S&P and related markets?
Sure. So we kind of went into today, as we were talking off mic, with a pretty bullish setup and a lot of different metrics, you could say, sentiment and positioning and breadth. We're starting to get a bit washed out. We're seeing some signs of seller exhaustion around some key levels. We were, kind of hovering above this important wall of puts around 3,600 and also that 200-week moving average. So there's some reason for buyers to try to step in with all that in mind. And they did try later in the day around 10 a.m., from the cash open until recently. And then the Bank of England came out and said, you know what? You might have thought that our QE was going to last for a while, but actually it's probably going to be over this Friday. I mean, they're saying with certainty, but you never know with these things. And so pension fund managers need to get done what they need to get done over the next several days. And as soon as that came out, we saw yields rise. And we saw the pound start to really tumble, and we saw the SPOOs follow and actually weaken more than the bond market in its reaction, which I thought was maybe a little bit overdone. But nevertheless, we are where we are. We're starting to see maybe a little bit come back. But, that statement is basically one of, maybe people started to believe the Bank of England was the beginning of a sort of European central bank pivot. And the Bank of England is trying to say, no, that's not what's happening. We're going back into tightening mode. Inflation is still the prevailing concern. The real question is, how long can they do that? Because they still have a lot of issues.
Yeah, I think, we're seeing you mentioned it's a little bit exaggerated, and I would agree. I think it's the intense correlation to the US dollar right now. That's the indices are struggling as, the sterling dumped. I think the pound dumped and making the DXY shoot up, which caused most of this. But like you said, bonds are a little bit more muted. I'm not as freaking out as it seems like the equities markets are about this particular news right now. But let's talk about what are we going to do event contract wise, pick wise. So this does add a little degree of complexity for what I was prepared to say earlier. I thought we were going to close up closer to 36.50. It doesn't mean we can't in the next 20 minutes. However, there was a play that I liked for tomorrow based on that. Now, remember, tomorrow we have PPI coming in. I think we have the Fed minutes coming in the afternoon. So there are many catalysts that could potentially move this market quite violently. So here's what I'm going to do this week. I really just want to focus on the S&P 500 in terms of picks, and I want to do something a little bit different. I know we're supposed to keep it simple. Do I like the yes or do I like the no? I think tomorrow warrants a different style of trading these event contracts, and this is just because of PPI, Fed minutes, and other catalysts like the one we're seeing right now. And the likelihood of an outsized move in the market. I think this market is going to move very dramatically tomorrow. Now, the challenge is, Mayhem, I don't know which way it's going to go. So the cool thing about the event contracts, if you're looking at ES right now, these are today's prices. The new ones will come out after the market closed for tomorrow. I like taking both sides of the tail here, the way out of the monies for tomorrow, especially if I can get them for cheap. So for example, say we close right around here at 3,600 in the next few minutes. I think it might be smart to do sort of a bizarre type straddle on the S&P for tomorrow. Say you can get the yeses on the 36.50 for cheap, like $1 or under. And then you can get the yes or the no's, for 35.50. You can do the same thing. Those will also be way out of the money if we close right here at 3,600. I think you have a chance of one of those sides being correct tomorrow. This is a strange bet. It's not something I've done on past podcasts for Place to Trades, but I do think it's the right play for me. So, for example, I'd be buying both of them. The 36.50s for the yes, the 35.50s on the no tomorrow, and those would both be way out of the money. And they're likely, if I could get those for like less than $1 or something like that with a $20 settlement on these contracts, I like that. I think there's a big chance of pretty extreme volatility in the markets tomorrow. What are your thoughts on this particular play? Am I crazy or do you like this?
I do think it's interesting. It's sort of like a straddle setup. I do think we'll probably have a reasonable degree of volatility tomorrow for a couple of reasons. You mentioned two of them. We've got PPI and Fed minutes. We also have a 10-year auction not long after PPI and before the Fed minutes. And I think that's going to be pretty important for setting the tone for the equity markets. I've been posting about this a bit today, that there's such a strong correlation between QQQ and TLT, but the same exists between really just yields on the inverse in the S&P 500. So I would say tomorrow, if PPI comes in hotter, then probably going to see a pretty big move down in the S&P. If it comes in cooler than expected, we could get a decent rally out of that, particularly if the bond market sees some relief. The other one, CPI on Thursday is probably going to be the bigger volatility driver, but I think the market's going to look at this data as a preview for the CPI.
That's a really good point. So I think we could have back-to-back high volatility days. For me, I would still be playing the out of the money event contracts on both of those days, because we're seeing a market that is moving, and it's moving violently, quickly, dramatically. The risk reward there is better for me. And remember, with these new event contracts from CME through Trade Event, you don't have to hold to settlement. If you take a position and it works in your favor, you can exit for a profit. So I think the next 2 days for me, it's going to be the out of the money strikes, and I will be buying when they're cheap and selling when they've gained me a profit, because of how rapidly this market's moving. Now, I see Anthony Crudele's in the chat. He said, "Horse, what do you think about ES close today?" He just bought some yes for 3,600. I got to be honest with you, Deli. I think it's likely that we close right around here, but I can't do it. And one of the reasons why I can't is we have a very large participant in the market who's been waving his hand or her hand for several days down at 35.50, sitting there with over 600 lots right now. Anytime we're trading this close to that, it gets my attention. I think that order is bound to be filled, which is one of the reasons why I like that sort of strange straddle play for tomorrow, because at some point 35.50 is very likely to be filled. They've been there for quite some time. That large resting liquidity gets my attention. I don't know if I could take the 3,600 today's trading this close to it with a few minutes left and a few points away. It just seems like a challenge for me. I don't know if I would take that in the last 10 minutes with my particular money, but kudos to all of you that are taking the yes on that. I did play the event contracts earlier today at the open, taking them for 36.50, and did pretty well on that. But I think the big message here is that the market's going to move pretty violently in the next couple days. I like the out of the monies. So I'm not going to spend time talking about the Russell or the NASDAQ, because I think the story is basically the same. I will say, Mayhem, it is interesting to note the difference between the three indices. We're seeing quite a bit today of divergence between the Russell and the NASDAQ especially. I mean, the Russell's 0.3% down, while the NASDAQ is 1.5%. That's a little bit of a decoupling there. It's kind of bizarre. Okay, he's got the stats back up. This is what I wanted to see. Out of all the markets that we've talked about, noticeably a lot more red than last week. So the first week we did our show, it was all red, then it went all green, and now here we are back to everything in a bloodbath. If you were to say anything is the strongest, I think it's crude oil. For me, I'm taking the yeses on crude always. I am very bullish on oil. I do think it's the one showing the best strength out of all of our options here. It's above its 50-day moving average. It's above 50 RSI, indicating, it's in positive momentum territory. Buyers are in control. You had a stretch of really nice rips on 3 closes there, and then a little bit of a pullback yesterday. So I don't know about you, Mr. Mayhem, but I will be taking the yes on crude for tomorrow, looking for some continuation. What's your thoughts on oil here?
Yeah, I mean, I think we have to be kind of constructive of oil here. The big question in the market is really whether China reopens. I think if they do, then oil is destined for the triple digits again. But for tomorrow, I think the consolidation we've seen out of this recent breakout, we're kind of back testing the breakout. It looks pretty good here, so I'll go with the odds of a yes on crude oil tomorrow. What was the number we're yesing above?
Well, we have today's that we can talk about, but I did my picks for tomorrow. This is our first time doing our show at a different time, so it kind of threw me a little bit different. Right now, the current strike for oil is at 88, and I'm assuming it's going to be, since we're so close to the close, it's probably going to be that for tomorrow. And crude oil is trading at 88.53 right now, down today 2.85%, which is a pretty significant pullback. But I still like the over. I'm taking the yes for crude tomorrow if that strike is 88 that we're talking about.
Yeah, I'll take the yes on that for tomorrow as well. I mean, I'm overall constructive on it, but I think the pullback was needed to be able to have a continuation of the uptrend. Otherwise, it would have been getting a little extreme.
Yep, I agree with you here. It's definitely a dollar dominated market right now. I wanted to talk about gold and silver, but I had a really nasty gold trade the other day, and I'm still licking my wounds a little bit trying to long that absolute dog. I
Can
think the
we
key to success with gold is just never touch it. Sorry, go ahead.
can we talk about silver though?
Let's talk about silver. It is actually technically the strongest of the metals, despite the last four closes pulling back. What are your thoughts on it?
I'm gonna take the under on it. It's probably what, like a 19 strike on that. I'm gonna say it continues lower because it just, even though technically it does look pretty strong here, uh, this is another story of rates and the dollar. And because of how volatile markets have been, and particularly the bond market, I feel like there's still some potential downside in these precious metals, particularly silver here. I think it could give back a good chunk of that recent gain. And it's just one of these. The silver is one of those markets that destroys everyone who plays it. It doesn't matter if you're a silver bear or a silver bull. It will kill you. Like
It
that's why they
absolutely
call it
does.
they call it the devil's metal, and there's a reason.
In the chat, Crudele said silver's the widow maker, and we
Yeah, it
totally
really
agree
is.
with
He's
that.
100%.
Yeah, and I actually would have to update my stat sheet here for the show because it did just lose the 50 daily moving average and the 20 and the 100. So this thing's just got loser written all over it, pulling back even under 50 on the RSI. So that happened quite quickly today. I updated my stats before the show here, and silver has absolutely taken a dump. So you know what? I don't hate that bet, Mayhem. The strike is 19 right now.
Yeah.
The one that we're showing again with all of these event contracts, just to remind people, on the Trade of A app, you can go in and click the market that you're looking to trade, and there's a button that says strike list. So for all of them, you can click that and see all the yes, no options on the event contracts, higher and lower. You don't always have to play the the at the monies. Like I mentioned earlier, for me, I actually am more attracted to the out of the money options right now, just because of the volatility we're seeing. I think once you see the VIX die down, the volatility sort of take a breather in this market, whenever that might be. None of us have a crystal ball. That'll be when I'm more interested in playing the at the money yes or no event contracts. For right now, I think you get a little better value, especially if you can buy them during regular trading hours when the spreads are a little bit better. I think you get better value playing the out of money, in my experience, because of the volatility that we're seeing right here. It's pretty amazing. If you're new to the event contracts, please check out placeyourtrades.com and walk through everything there to open an account and learn more about them. If you're not aware of what we're talking about here, they are a $20 notionally valued option, essentially, yes or no, on 10 of the most liquid futures markets there are. So there's nine strike prices. You have at the money, 4 above, 4 below. And it's basically a yes, no pick on options. And the thing I like is the lack of theta on these, right? So if I'm right, I'm right. I'm not competing against time, other than the fact that they are a 1 day contract, a 1 day trade, essentially. That's the only way time becomes a factor. So check out more at placeyourtrades.com. That's what we are talking about on this show today and our picks for tomorrow. I think those are probably all the markets that I would actually trade. Mayhem, is there anything else that you're interested? Oh, wait. I almost forgot. I do have to do my Euro USD guess here because I'm playing against to see if I'm better than random. So the first week I was better than random. Last week I was not. I think I took the yes on the Euro USD and it went down. So horse was wrong and the coin flip was right. So right now I'm tied with random. And the only reason I'm doing this is because it's the only market here I don't trade. I am not a Forex guy. So I thought it'd be funny to see, could I use my technical analysis skills to try to be better than random? So we got to make our prediction for today. So let me look at the chart. Let's see, Euro USD, what is it doing intraday? Looks like dumping like everything else did on that news. So do you think it recovers tomorrow? I'm going to take the no. I'm going to say no. It's going to go down. And now I'm going to flip the coin here and see what the random says. So heads takes the yes, tails takes the no. Here we go. That is a head. So we're at odds again on the coin. So I'm taking the no. The coin flip is taking the yes. That is the Euro USD, the only market here I don't trade. We'll continue to see if Horse's technical analysis skills are better than random. I'm taking the no mainly because of the plunging that it's taking today. It is still in a downward trend. It is below the 50-day, the 20-day, the 100-day, the 200-day. and I'm wagering that it will continue to head down tomorrow. So those are all the picks. Any other thoughts on the market, on PPI tomorrow, Mayhem? What should we be looking at for that particular number tomorrow when it gets released? Any thoughts on that? We're going to pick your macro brain here.
Yep. Well, so we've got 4 quadrants in PPI that we look at, right? We've got the headline number, we've got the core number. I think a lot of people are going to be mostly focused on the month-over-month measurements because it's really showing us the near-term velocity. So the forecast is 0.2% for PPI and 0.3% for core PPI. Energy was pretty volatile in September, mostly to the downside. So I'd say that part of PPI might be a little softer than expected. Commodities also didn't have a particularly great month. So maybe it will be within expectations. I don't know that it's necessarily going to be cooler than expectations. I'm not looking for it to be hotter than expectations. So I'd say sort of like, looking at Red Riding Hood, like just right. The porridge is just right. That's kind of what I'm looking at for PPI. So it might be kind of like a ho-hum, but I think that would be bullish for equities if they just saw it kind of come in line in expectations. That might give the bond market a bid. It might give the dollar a little bit of weakness. It might give equities a little bit of positive directionality on the day. But the really big number is going to be CPI, and I think that's going to be an event volatility catalyst no matter how it comes in. I think, neutral to cool will be very bullish, especially the cooler it might be. And then, if we get something hot, JP Morgan put out a survey that I think Aisha referenced earlier, was saying 5% downside, 2% upside in sort of both extreme scenarios.
Wow. Yeah, 5% downside would be pretty extreme. We didn't really think PPI was going to be a big deal a lot in the past, but that last one was. You're not thinking we're going to get a big outsized reaction tomorrow like we saw for the last PPI release?
I do if it's hotter or cooler than expected, for sure. I think that could be a major tail fattener. But in terms of what I think it might be, and I could be completely wrong about this, but I think it's probably going to come in closer to forecast and being really hot or cold. So if it's not an outlier event, I don't see that as being a big volatility catalyst. Now, when the data comes out pre-market, things can whip all over the place. But what I'm really interested in seeing is how they trade it for like the first hour or so. I just don't think it's going to be quite the whipsaw unless, again, it's much hotter or colder than kind of what the forecast is, particularly on the month over month.
Makes sense. I like that analysis, and we appreciate you, as always, sharing your macro thoughts with us. If you're interested in what Mayhem and I do on more of a serious level, please check out traderaid.com or find us both on Twitter. We do a lot of different analysis from a technical and fundamental and macro perspective. In a bit more of a serious way. This is our chance to check in with each other and have a little bit more fun with the markets, talking about what do we think is going to happen just in the next 24 hours only. That's what we've been talking about today here as we near the close for this day. The market is fighting to recapture 3,600, pretty likely place for a close. My big cutoff will be that giant order on the ES futures down at 35.50. I think below that, I'll be taking a lot of no's on the ES event contracts. Just for perspective, for folks that don't trade exactly like we do, we look at volume a lot, specifically volume profiles. You have a very large low volume node there going back a couple years. So this is why we're seeing the market fight right here to hold the 3,500s, in my opinion, because there really has been no interest in the middle 3,500s over a couple years worth of trading. So you're getting buyers pushing it back up, trying to get us back to areas of interest. If they lose that halfway point, 35.50, I think there's a reasonable chance that things do get very ugly very quickly. So even though we won't see you for another week on this Place Your Trades podcast, if we're under 35.50, you bet the horse is going to be taking quite a few no's to see things continue on downward. Not that I want to see that for anyone's portfolio or anyone's retirement stuff, but as traders, we have to utilize the tools we have. And I think that's sort of the line in the sand here down in the mid 3,500s. We will see everybody next week. Same time, same place on the Place Your Trades podcast. Make sure to subscribe to their YouTube channel. Follow me at Michigandolph on Twitter. Follow Mayhem. Remind everyone, what is your Twitter handle again, Mayhem?
Sure. It's Mayhem 4 Markets, Mayhem number 4 Markets.
All right. And also follow Place Your Trades on Twitter. And if you want to have a chance to win our weekly giveaways, go to placeyourtrades.com and sign up on our mailing list. I hope everyone stayed safe today and had a great trading day despite the volatility and some of the ugliness we saw here in the second half of the day. It looks like everyone that took those 3,600 yeses might get paid out on those here as the market makes a little push into the final minutes. We hope everyone has a great day. We'll check in with you all next week. Take it easy.